I'm really excited about what's about to happen in the digital asset space because of supply and demand.
Yeah.
Right? We got the Bitcoin ETF, which is going to be approved. BlackRock's going to get approved. That approval is going to unlock $30 trillion of assets in financial advisors who are not allowed to buy digital assets. And if their clients say, I want 10 basis points, that's 30 billion. If they say, I want 100 basis points, 1%, which is not even a lot, that's 300 billion. Bitcoin trades about 100 billion on average. About 600 billion is mostly hodled. So if 300 billion comes in on 100 billion of free float, that's a big move.
The anticipated 2024 crypto market bull run encompasses key elements, including a monumental event like the approval of a spot Bitcoin exchange-traded fund, institutional adoption, and the potential for a long-awaited pivot by the Federal Reserve. Mark Yusko, a renowned hedge fund manager and the founder of Morgan Creek Capital Investments, expresses confidence in the approval of the BlackRock Bitcoin ETF application by the U.S. Securities and Exchange Commission. Yusko predicts that BlackRock's application will be the sole approval in January, drawing parallels to the tactics used for gold ETFs, granting larger players like BlackRock a strategic edge. While it remains uncertain whether the SEC will approve one or multiple applications, the impact on crypto asset prices is expected to be substantial. As of now, Bitcoin is trading at over $37,000 per coin, marking a remarkable 124% increase year-to-date, while major altcoins, including those like Solana and Avalanche, have seen three-digit percentage increases. Yusko asserts that the approval of BlackRock's application could unlock trillions of investment dollars currently sidelined from the cryptocurrency market. He emphasizes the potential for significant capital inflow if BlackRock's influential clients allocate even a small percentage of their portfolios to Bitcoin. Looking beyond the ETF approval, 2024 is also a significant halving year, a precursor to substantial upside rallies in Bitcoin and other crypto assets. Yusko predicts a 440% increase in Bitcoin's price, reaching around $200,000 between June 2024 and June 2025, when considering the ETF approval and other developments in the crypto space.
Please take a moment to like this video, subscribe to the channel, and don't forget to drop your comment and observations in the comment section below. Thanks and enjoy the video.
Ultimately, the halving cycle is destiny, right? When the halving cycle occurs, and the halving occurs next April, the block rewards get cut in half for Bitcoin, and the price of Bitcoin basically has to double. Right. So, well, why does it have to double? Well, if it didn't, then the miners would all go out of business. And we can't have the miners all go out of business. So it's kind of a built-in mechanism for increasing the price. Well, why does that matter? Well, an increasing price attracts activity, attracts notice. And so the more money that gets converted from fiat into Bitcoin, then some of it trickles down to the other parts of the ecosystem. And it's, rising tide lifts all boats. Yep. So a fair value of BTC today, somewhere in the low 50s, according to the Tim Peterson model, based on Metcalfe's law, which I think is the best model out there. Let's round it to 50 to be conservative. That doubles to 100 in April, May next year. We shoot right through fair value in these crypto falls. That we're in crypto summer now till next June. Then we go to crypto fall from June to June following the halving. Then we go to another crypto winter, but that's a long time from now. But in crypto fall, on average, we've rallied about 2.5 times fair value. I don't think that happens this time. I think partly the law of large numbers, partly not as much leverage in the system. So, do we get 1.5, 1.75? 150, 175, maybe we could get to 200K. I'm going to take the 150 number. Seems like a logical place for us to be sometime in 2024. Technology is evolving, and digital technology is here to stay, and blockchains replace trust with truth. Truth is better than trust. And the banking industry has relied on trust for 800 years. They've had a good run. It's coming to an end. It won't end tomorrow, but ultimately, we can all be our own bank. We can own our own assets. We can own our own identity, our sovereignty. And we can actually, look, the key word in the white paper is peer-to-peer, right? Hyphenated. And, or 3 words, if you want to call it 3 words, but, or 2 words, peer-to-peer. But the reality is that's the key. What does that mean? It just means that I can send you value without an intermediary.
Right.
Right now, you have to have a bank account. I have to have a bank account. I send you a wire or a Venmo or something. And, that's the funny thing about fintech. There's no tech, right? It's just a UI UX. And it's not a web transaction because I send it to you electronically using an app, but that's web too, Mark. Well, yeah, but then it leaves the web and goes into the banking system.
Yep.
That is not native. That is not digital. Yep. So what's going to happen in Web3 is we're going to have native currencies, Bitcoin and others, that will never leave the web. That transaction that you and I do will stay resident, or I'll be in my car being driven because, we won't drive, and it'll pull into the charging station. I won't get out of the car and put a card in a slot and have it call, literally use a phone line or an internet line to call a bank and approve the charge.
Right.
That will not happen. The car will access a wallet and pay the machine. That will all happen on chain, on the web.
Instant
and
sale.
that Web3 ecosystem.
Institutional adoption of cryptocurrencies has been a prominent topic in the crypto industry for several years. The anticipation was high when Michael Saylor's MicroStrategy began accumulating Bitcoin in 2020, with many expecting this move to catalyze mainstream crypto adoption. However, this didn't materialize, and similar hopes in 2022, fueled by the metaverse trend, were dampened by the Terra Luna collapse and its repercussions on the crypto sector. Yusko predicts a transformative shift in 2024, envisioning not only the entrance of wealthy institutional investors post-approval but also the commencement of widespread mainstream adoption on January 1st. According to the prominent hedge fund manager, the upcoming year will mark the initiation of comprehensive tokenization for real-world assets. This transformation encompasses various domains, ranging from investments to medical records and advertising, all residing on the blockchain and owned by individuals rather than large corporations that monetize data by selling it to the highest bidder. Yusko's insights suggest a pivotal moment in the cryptocurrency landscape, with the potential for a broader integration of digital assets into everyday life.
2024 is the big year. And look, I've been talking about this for 6 years. It's crazy. I've been talking about this for 6 years, that 54 was the mainframe, 68 was the microchip, 82 was the personal computer, 96 was the internet, 2010 was the mobile net, and 2024 was going to be this thing, the truth net. And what's the truth net? The truth net is the internet of blockchains, where the blockchains defined this spatial web and everything settles to chains. That we don't use centralized databases. We don't use centralized companies, where we don't have cookies tracking our information. We own our information. We don't use financial services companies that are outside the web to transact. We transact peer-to-peer using native digital assets. And 2024 was the beginning of that 14-year trend. So we're just beginning, right? We haven't even started the game. The national anthem's been played. The players have lined up. They're about to blow, the whistle here on January 1st. And then we start the game. And it's going to be a glorious game. Now, the next 4 years, like 54 to 58, like 68 to 72, like 96 or 82 to 86, like 96 to 00, like 14 to 18, 10 to 14, they were all amazing. But then what followed every one? A crash.
Yeah.
Every time. Because we got super ebullient, valuations got too high, and then we had a crash. But what came off the other side of the crash? Remember in 2000, 2001, 2002, massive crash, end of technology. The internet's done. Pets.com is a failure. Webband's a failure. You ever heard of Amazon or Chewy? Those are pretty successful companies. Yeah. Uber, pretty successful company. Apple, pretty successful company. They all emerged post the crash. So we'll go 2024 to 2028, and we'll have this incredible period. We'll build a bunch of companies, and then we'll have a bust. And we'll have a crash, and people will say, I told you it would never work. It's dumb, stupid, too slow, and then we'll build on the other side the real infrastructure to make it invisible. We use the technology for its intended purpose. We don't think about the technology. Yeah. We won't think about what a blockchain is or does and how it's different than a two-dimensional Web 2 solution. What we'll realize is, hey, I want to use my medical records for my own benefit, not for their benefit to sell my data to Merck to monetize. I get the advertising revenue to me. I say Pepsi could advertise to the day I die. I'm never going to drink a Pepsi because I don't like the taste of it. Yeah. Coke doesn't need to advertise to me because I'm going to drink Coke if I drink anything. So why don't they pay me directly? They don't need to advertise on television to have me buy a Coke. Just send me money and I'll buy Coke. So all of this kind of data flow is going to happen, but it'll be invisible to us. Right? You'll walk by your favorite store and you'll get a message saying, hey, we picked out that stuff you were looking at last night. It's all boxed up and ready. Come on, 20% off. Yeah, that works for me. So that will happen, but we won't talk about it. It will just happen. Exactly. And it'll be as transparent as all the technology we use today that didn't exist. Right? We all have uttered these words. How did our parents survive without a phone?
Right.
They actually survived quite well. They had very nice lives. And my dad still doesn't have an ATM card, literally. Because he's like, I just go to the bank and get the money. Like, why would you do that? Why would you walk in a building and ask a person for money and just use a card? And in the future, you won't do that. You'll punch a button on your phone, and actually probably won't even be a phone. It'll probably be a hardware security module. It'll be a hard wallet that you carry around with you, and the phone will go the way of the dodo bird.
Simultaneously, the SEC is intensifying its regulatory actions against the cryptocurrency industry. On Monday, the Commission revealed legal proceedings against the entities overseeing the cryptocurrency exchange, CREN, alleging the operation of CREN's crypto trading platform as an unregistered securities exchange broker-dealer and clearing agency. This echoes similar language used earlier in the year when the SEC sued Coinbase under the same accusations. Notably, the SEC not only criticizes CREN for lacking proper registration but also questions its business practices, including the commingling of customer funds and inadequate record-keeping, posing additional risks deemed unacceptable for a properly registered securities intermediary. The SEC filing points out instances where CREN held customer crypto assets exceeding $33 billion and intermixed them with its own, identified as a significant risk of loss. Moreover, the Commission accuses CREN of occasionally using customer cash from bank accounts to cover operational expenses directly. In a notable move, the SEC enumerates various crypto assets, including Cardano, Axie Infinity, Polygon, Alund, Filecoin, Dash, and Solana, in its discussion of listing securities. Simultaneously, the Department of Justice is reportedly seeking over $4 billion from Binance Holdings as part of an ongoing investigation, with negotiations potentially involving criminal charges against Binance founder Changpeng Zhao in the United States. Zhao, in response, announced his resignation as CEO, acknowledging mistakes and emphasizing Binance's commitment to safeguarding user funds and denouncing any allegations of market manipulation. Share your thoughts on these recent regulatory developments and their potential impact on the spot Bitcoin ETF approval in the comments section. For more Daily Dose Crypto news, check out these two awesome videos on your screen. Click now and we will see you on the next video.